Liquidity, liquidity, liquidity. Now we know one of the strongest, most important things in the market is actually liquidity. People think they understand it, this new word inducement that people are starting to talk about, but the reality is no one understands the true depth and the true lengths you have to take your understanding of liquidity to truly be profitable in the markets. Now when it comes to market movements on a daily time frame, that's usually going to be because of fundamental factors, geopolitical factors, interest rates, inflations, the health of an economy versus another economy. However, for intra-session movements from London Open to New York Open, just that few hour window, the primary driver of price action there is actually liquidity. More important than market structure, more important than supply and demand, certainly more important than support and resistance, Fibonacci trend lines. Forget all of that. Liquidity will always be number one. And now when it comes to the concept of liquidity, it goes very deep. We can talk about the idea of inducement, which is essentially a manipulation. It's a form of run of liquidity. It can be an inducement of a support and resistance, inducement of a trend line, inducement of breakout traders, inducement of pattern traders like head and shoulder traders. So we have multiple types of traders getting induced, and then the types of inducement being major, medium, and minor, and how you combine them all together with confirmations to add security to your entries. That's when you really start to understand the market to the highest level, and that's when you truly unlock real profitability. Now, as you know, at the time of recording, I've been giving all of my trades publicly, live, ahead of time for free on Twitter. I'm giving each one of my trades with its exact entry, exact stop loss, exact break-even protocol, and exact TP levels with a full analysis. And on this channel, I've documented with a MyFX book, with a broker sync journal, with countless case studies proving the execution and showing each time the timestamp of the live call out. So this is beyond shadow of a doubt, complete proof of a level of profitability that over 7-month duration with over 60 trades called live ahead of time and profiting over 55%. And every single one of my public signals has been because of an inducement, and therefore each entry type is as a result of a run of liquidity. So if you can really understand inducements, unlocking a gain of 10% a month can become actually rather realistic. And in today's video, I'm going to be showing you a specific type of inducement that you can either add to your profitable trading strategy if you have one, or if you feel a little bit lost, you don't know where to begin, you can still use this exact step-by-step approach and start over here to find your baseline level of profitability. And I'm going to be giving you a full outline on how to exactly identify this type of inducement that occurs very often. So I'm not going to cherry pick examples. I'm not going to show you my favorite, most powerful examples. I'm going to show you price action of literally yesterday. I can't make this up. I only trade two currency pairs, EU and GU, and this is price action of yesterday. Nothing special because this happens every single day. In fact, if you watch one of my videos where I go through debunking smart money concepts and I prove that smart money traps exist, because I don't just say, here's my idea and here's a theory. No, I come and explain it, I show it, and I give a catalog of evidence of case study after case study after case study after case study that you can go and watch that video and start to really see the reality that the market induces all types of strategies, including smart money concepts. So on yesterday's price action on GU, I came on Twitter and said, here's a normal day of price action, but count how many smart money traps you can see, because in a single session, you can see many. And just because you're a kind of smart money trader that maybe won't take a loss here, believe me, there is all kinds of smart money traders. People will be taking entries in all kinds of spots. And just because you won't, doesn't mean other smart money traders won't. The reality is it doesn't matter what you do or another person does. It matters what the market is doing. And the reality is the evidence is all there for us to see. You can either hate and deny in the comments and be an ICT flag holder to say this works, or you can just see the evidence in the market and use it to your advantage. So right now we can see on an intra-session perspective from Asia to London, the market is bullish, forming higher high, higher low, higher high. So what would we expect from market structure? Price to come to a demand area and make a new higher high. So we would actually see this bullish reaction enticing in buyers with this push up, and then when price returns, enticing even more buyers. So when price comes lower, market structure traders that are very primitive, they're only trading one time frame, but obviously each time frame has a narrative, each time frame has its supply and demand, each time frame has its buyers and sellers. We know that market structure over here failed. Of course, higher time frame matters and so forth, but I'm just showing you context. Next, we have not only market structure, the demand area is also failing. So supply and demand, market structure are very interlinked. But next we have smart money concepts. Smart money concepts is the typical pattern of equal highs, let's say a resistance level, a run of liquidity, a bearish reaction, and then people enter on that bearish mitigation. They either use an OTE, optimal trade entry using Fibonacci, a fair value gap, or an order block or a breaker block, whatever from ICT concepts you use, is usually after a run of liquidity. Equal highs, run of liquidity, and then entry, for a mitigation, let's say. So we see that pattern many times across the day, every single day, where we have a buildup of liquidity, a run of liquidity, and a push out. So that area becomes a zone for smart money traders to look to enter on. Then what happens over here? We have Asia high and higher time frame equal highs, run of liquidity over here. We have another one over here, equal lows, run of liquidity. Another one here, equal lows, run of liquidity. So these patterns are going to be failing and failing and failing, but at the same time, some of them will be successful. For example, over here where we have equal highs, run of liquidity, mitigation, respected. So why do some of these patterns fail and some of these patterns succeed? Well, it's not the matrix idea of the market is going to feed you an idea to show you you're really right. No, I'm not going to talk about that. I'm just simply saying that the context matters more. Liquidity matters more. So if you are just trading randomly this pattern, you're going to get smoked every day. But if you are trading this kind of idea of build-up of liquidity, a run of liquidity known as an inducement, with time of day, with session volatility, with context, that context can be higher time frame, that context can be supply and demand, that context can be market structure, but that context needs to be run of liquidity. So if you can find the inducement of the day, if you can find the inducement of the session and trade away from that and use that to your advantage, you will always make more money than the guy who's only trading market structure or supply and demand alone. For example, when we identify this is the inducement of the day, this is the high of the day, then we know we need to trade away from it. We need to be bearish. So all of these demand, market structure, smart money zones will all fail. And how does the market make them fail? It comes into the area, gives a false reaction, takes them out. Finds another smart money zone with this run of liquidity after this equal lows, comes to the area, gives a false reaction, takes them out. Same here. We had this smart money candle from the liquidity run on the left. Price came into the area, fake reaction, takes them out. Now, don't shoot the messenger. The evidence is here every day. We don't need to explain why. We don't need to believe in the matrix. The evidence is here every day. Use it to your advantage or hate on it all you want. But when you've identified the inducement of the day, then you trade away from it. Then you know this buildup of liquidity, this run of liquidity, the real inducement will be respected. And actually later on, I go on to show that if you're using smart money traps to your advantage, it further strengthens the understanding of the inducement of the day. So we know that the inducement of the day is here. It has a major inducement from a higher time frame perspective and Asia higher perspective and the previous smart money trap. So it's a significant inducement. Therefore, it's the inducement of the day. Even a minor inducement right here. Once that's identified, bearish push down, break of structure relative to this area, then we have a build up again, inducement, bearish reaction, price comes in, induces these highs, does an inducement over here, bearish reaction, build up of liquidity again, inducement again, bearish reaction, build up of liquidity, inducement, bearish reaction. So when you find the inducement of the day, then you just find consecutive inducements to build a trade idea and eventually find an entry point. And it's like clockwork and it's so easy to read because this is the language of price. This is how price moves. And rather than getting caught up in Fibonacci's and support levels, focus on liquidity, focus on inducements, and focus on using that as your true driver of price for directional bias if you are doing intraday and intra-session trading. And in fact, here was the actual trade I took yesterday, and it was exactly based on that. So let's go into not only the idea of smart money traps, but this theory of the type of inducement I want to share with you, which is going to be pertaining to support and resistance traders and breakout traders and using their liquidity to our advantage. So the idea I want to demonstrate is very simple. If you have a market structure that is bullish, let's say, and then price is continuing to make higher highs and is building support levels, let's say, bullish market structure, very simple, very ordinary. Once the market decides to do a shift and now has a bearish reaction, we went from internal higher highs and higher lows, like so, to going on to make a lower low, a bearish market structure shift. That's when we know we have an opportunity to sell. But we have to consider we had this support level right over here. And what usually happens is price will come back and do a retracement, naturally so, and price can retrace to all kinds of levels. It's a bell curve, it's probability. Sometimes it'll be the 61.8, sometimes 70, sometimes a breaker block, sometimes a support and resistance, sometimes a trend line. There's all kinds of reasons price can be explained, but the reality is price goes deeper and it's not usually these patterns. But for argument's sake, let's say price comes to this area over here. So we have support level turns into resistance. So you might get price coming in, tapping into that resistance and coming lower. We might even form a lower low. That's not a requirement. But eventually, what we'll see is price comes in to the previous support level, forms a respecting resistance level. Now, when that support is turned into resistance, all kind of traders are getting in. People are going to be using the Fibonacci level, the breaker block, the resistance level, the double top, maybe a doji candle. All kinds of liquidity will enter the market over here. So this resistance level now, for us, we can see as a zone of liquidity. Now, the reason it can be a zone of liquidity is because we know sellers' stop losses will be here. Those Fibonacci traders, those support and resistance traders, also market structure traders, because this has made a new lower low, therefore it's a supply zone. There'll be all kinds of stop losses right above, therefore liquidity. There's also going to be pending orders of who? Of breakout traders. Now imagine this, price comes up, like so. We see price come over here, and the moment it's about to break structure, the moment it's about to go bullish, buy pending orders are going to be triggered at these market structure swing points. So we'll see a bullish reaction. So what happens here? When we have a bullish switch like this, breakout traders and pending orders will be triggered. And where are those pending orders that were buy stops and the breakout traders stop losses? Where are they? They're buying in this area, and their stop losses are going to be right below. So we had liquidity over here above the supply zone, and we have liquidity over here below this support level. And people are obviously speculating a new higher high, and their stop losses are going to be here. So when we see the market does not do that, in fact, it goes on to do something like this. This is the exact type of inducement that I want to discuss today. It's inducing the sellers, the supply zone sellers, the support and resistance sellers, the market structure sellers, the trend line sellers. All kinds of sellers are getting out, but also breakout trader buyers and maybe certain pattern traders. There's going to be a whole liquidity shift, a manipulation event that happens based on this inducement, and the way to identify it is very simple. We are first of all going to find a market structure shift from a bullish market to a bearish market. Once that has been identified, then we will see a support level turning into a resistance level. Once we have seen support turn into resistance, then we will wait for that liquidity to be induced, ideally pairing it with a supply zone, meaning the checkboxes are going to be this: market structure bullish turns bearish. First confirmation. Next confirmation, support level identified. That support level becoming a resistance level identified. Then maybe a new lower low, but it's not exact requirement, but a reaction. Next tick. Then we find a supply zone right above that we can potentially trade from, and we simply wait for an inducement of that support level. Then we simply wait for an inducement of that resistance level, and that can be a potential entry. And you'll usually see this kind of trade is very fast. It does an inducement and then makes a new lower low very, very quickly, leading to a fast intra-session trade. Very easy to get an almost instant 1 to 3 risk reward. And if you time it with the inducement of the day, if you time it with time of day and lower time frame confirmations, this becomes a very reliable and very successful trade type, because you are trading away from the inducement of the day. Because if you look at it from another lens now, this, for example, could be your Asia range liquidity. This could be a draw on liquidity tapping into a higher time frame supply. This could be the bearish shift that happens during your London session. This could be your retracement during New York. And then we have this build up inducement in the New York window, mitigating a supply refined IFC, lower time frame confirmation, and going on to make a new lower low as a New York continuation intra-session type trade. So here, that's the exact confirmation checklist. These are the things you need to look out for. You don't need every single one of them, but obviously the more you have, the more reliable it is. And this is a very repeating type of trade. And then you can add things on top to make it more reliable: risk management strategies, break-even strategies, take profit management systems, confirming for the most volatile moment of the day. So therefore time of day, lower time frame confirmations. Obviously there's a lot more to build on top of this to really become a master. But the concept is very simple. You find a shift in market structure or a volatile trend. You find a support and resistance level interaction, and then an inducement of that. Very, very simple, leading to very high quality setups, and it's all pegged on liquidity. So lo and behold, the trade I just showed you from yesterday, this is not cherry picked, this is literally yesterday. This is exactly what happened. We had a previous day high liquidity and Asia high, equal highs, trendline liquidity. We get an inducement of that. Smart money traders are now interested. It's happening pre-Frankfurt Open, more inclined to be a trap. Then we get a bearish switch, a bearish reaction, smart money trap draw over here. Then we get the real inducement of the day after the London Open. After we've had the real inducement of the day, that's when things get interesting, because then we have minor inducement and higher time frame inducement and Asia range inducement. This is the inducement of the day. Then we just look for consecutive inducements to confirm the sellers are in control. Build up, inducement, bearish push down, smart money trap draw that we know this is going to be liquidity, and therefore this can be a very good trade also. Right here, very reliable trade like this, targeting to make a new lower low, 1 to 10 in a single session, very achievable, as you've seen me do many times, and this would be the best setup of the day. Now, as price went on, made a new lower low, what is happening next? Build up of liquidity, like so. Who's interested after that buildup of liquidity? Of course, smart money traders. Smart money traders see this run of liquidity and they're going to be entering right there. We know that's because this is the real inducement. This is the real inducement. This is the real inducement. This is therefore a trap. So we're going to get a short-lived reaction to invite and entice more smart money traders to get in. And these smart money traders are already happy because they saw the run of liquidity here of this support level. They saw this trend line getting taken out. So we're getting already smart money traders excited, but that's not the narrative. Therefore, narrative is more important than smart money concepts. Narrative is more important than market structure. Narrative is more important than anything. And to really understand narrative, you need liquidity. So once we've identified that bearish shift, then we need to identify the support level. For example, right here, this support level over here with 1, 2, 3 touches turns into a resistance level right here. Okay, so when we see support turn into resistance, in this case, price converted from support to resistance and made a new lower low. Once that lower low was made, this is very clear liquidity target. What do we get? We get a buildup of liquidity. We get traps being formed, trendline traps, support traps, smart money traps. And then once we get the real inducement, where does that real inducement go? It goes to a nearby supply just like this. Does the inducement of what? The support turn to resistance, inducement of that, bearish reaction, smart money trap draw. That's when the smart money trader is getting excited. Then we get one last minor inducement. And what is that minor inducement doing? That minor inducement is giving a mitigation of this level, okay? Confirming that inducement. And then for me, the actual entry is once we get an internal break of structure. So when we see prices doing high, higher low, higher high, break of structure, once we have that break of structure, we locate an entry right here. So it's simply bullish market structure, bearish break of structure, and then we get an entry like so. Very simple. And that's exactly what happened, but it's not about the break of structure of the entry type. It's the fact that we identified the real inducements along the way throughout the day. 1, 2, 3, 4, 5. We found 5 inducements, but that was not only the key. The key was also this entry type that I'm explaining, which is support level turning to resistance level. An inducement right after that can be a potential entry. And this very instant reaction, 1 to 3 risk reward within minutes, and can go on if aligned correctly to a 1 to 10 and beyond. And this trade as well can lead to a 1 to 10 in a single session. Now, I can go on and give example after example after example in just a single week. So let alone a single month on one currency pair. If you'd like to see me do a full case study on this exact theory where I show many more examples or more types of liquidity draws, more types of reliable inducements, do let me know. But for now, go ahead and try this exact entry type. Let me know how you get on because it's very step by step, it's very rule based, it's very mechanical and very, very reliable. Okay, so now that we've covered one specific example, I want to go through the last 2 weeks of price action. I want to explain multiple examples of exactly this piece of theory. Now, I'm going to show you all the examples I can find in the last 2 weeks. Doesn't mean every single one of them is a trade, but again, it's to show the concept works. And remember, there's a big difference. I've said it in all of my videos. There's a big difference between what we can see versus what we trade. Now, we can see things that look probable. We can see things that are likely to happen. However, to be able to trade upon an idea, the execution of an idea is another case. Because as you know, a restricted trader is a profitable trader. We might have a 60% chance price is going to go bullish, 80% chance price is going to go bullish based on our experience, based on what we know of the market. However, if it doesn't meet your execution criteria, if it doesn't meet your trade checklist criteria, well, it means you just can't take the trade. So certain restrictions that I'll explain in a moment that we can add on to trade this theory, to take it from an idea and a piece of theory to something you can actually utilize and trade specifically. So I'm actually filming this section with the same outfit on for continuity just a few days later, and we can see that this is the price action that I discussed previously. And now I want to show you all the examples in the last 2 weeks on GU of exactly this theory. So let me come onto the 5-minute time frame just so you can see details. Okay, so for example, a trade opportunity on Friday. We had on Thursday the high in the market that was happening over here, leading to a break of structure and forming a lower low over here. So we had a bearish push down, and upon that bearish push happening, we had this support level that was holding price with a few touches in this area. And then when price had a break, broke this level, we had it doing a test. So we had the break of a support level. Once the lower low is made, we had a resistance level, break, test, and then continuation. A new low in the market formed. Once that low had been formed, we saw it was respecting that level, forming a resistance, and then going on to make a low again. So we have seen a completion of a break, test, continuation, and we've seen the conclusion of a support level confirming to be a resistance level. So the next day when price comes into our London key window, again, this indicator that I have, that I custom built for myself, it has all of the relevant time markers. So we have Frankfurt open, London open, we have New York open, we have the key windows within, we have our Asia range, we have previous day high, previous day low. We have all of the relevant liquidity markers and timestamps that are needed, which you can go ahead and grab. It's just WWA trading session markers. This is one of the ways we are going to improve our probability of a trade. So this whole break test inducement theory can be applied very easily all over the market. And you're going to see a bunch of examples in just the last 2 weeks. However, to convert that into a tradable model, one of the most important things will be time. When does that inducement happen? If it can happen in these gray boxes, in the key time windows, in this case, it's in our London key time window, then we know there is a lot more probability for it to be justified to take an entry. So in this case, we had the break, we had the resistance, test. Once we had the new lower low formed, price comes back and does an inducement of that resistance level. And where does it tap into? Taps into a nearby supply. And that nearby supply is actually a decisional because it's the one that led to a break of structure relative to here. So it's a relevant POI. The price comes into the key window. All we need to do now is apply the theory to say, does it fit the checklist of break of structure? Does it fit the break retest rule? Is the resistance level forming a pool of liquidity? Do we get the inducement into supply? All of these things plus time window and lower time frame confirmations, we are cooking up a very strong trade model type that you can go and apply and test yourself right away. So all we need to see in the time window, do we get lower time frame confirmation of rejection? If we do, we can take the sell. And again, it might look like, oh, it went low and then came higher. That's okay, because remember, liquidity is the fuel of the market. It doesn't mean it has to lead to a new lower low. So for example, the fuel that we got from this inducement over here could be enough to just break this level, and then this became the new inducement low to fuel the move higher to take out this level and make a new higher high eventually. So we can say that that inducement that we traded, it served its purpose. It doesn't necessarily have to go and make a new lower low. We are just trading probable zones. And in this case, this could be enough to get a 1 to 3 risk reward. For example, you know our average stop loss, which we have done time and time again. Remember the signals I've been given for over 6 months now. The average stop loss in over 60 signals that I've given is about 4 pips. I'm just throwing it as an example. This is not actually a trade I took myself. We can see our 1 to 3 risk reward would have been met, and our first TP always is 1 to 3 risk reward. So we could always grab a small partial 1.5% locked in, and it doesn't always have to lead to TP2. So I'm just showing and demonstrating the theory. Next example, just the day before, which is amazing to see. We had this market structure shift where we have the low in the market that goes on to make a high in the market, taking out this previous lower high that made the lower low. So we've had a clear market structure shift from a bearish market to a bullish market. Now, once we've identified that, we see the previous resistance level that was a ceiling in price. Once the break of structure has happened, we now form a very clear support level. Once that support level is identified, we then get an inducement of that. And that inducement of that, in this case, it did not meet the supply zone. It did an inducement of all of this trendline liquidity and of the structural point. This one was outside of a time window. I double checked it. There was no lower time frame confirmation, but that means we couldn't trade it specifically, but the theory applies where we have market structure shift, resistance turning into support, and then after the break and retest, we get an inducement. So that was just the day before. Let's scroll back a little bit more. The next example is of the one that I've covered in depth, and that was actually a trade I covered on Twitter. And we keep scrolling back, and the next example is just the Friday before. So actually this one was a pretty active day where we had a high in the market that went on to make a low in the market. What was happening over here? We had a support level turning into a resistance level in the formation of the low. Once the low has been formed, what do? We see an inducement over here. It's tapping into this supply zone over here. The decisional that broke this point, the decisional that led to this break of structure, the initial break of structure. So it's a relevant zone. We'll just have to refine it on a specific time frame to find the exact fair value gap and imbalance. And then we can see very clearly we have a 1-2 leg protocol entry type. So this could have been a valid entry. Now, what do we have over here? When this lower high is formed, upon the theory that we are explaining, it goes on to make a new bearish push in the market. What do we see? A support level turn into a resistance level. Once that resistance level has been confirmed, we even get a internal break of structure over here to get more sellers into the market. Eventually, we get a inducement of the break test. We tap into a nearby supply on M1 of the exact decisional over here. Go ahead and backtest it to find the M1 decisional yourself. And then when does it give the reaction? Exactly on our New York window on the exact minute. Time-based manipulation is key, which is why I think it's super important to have something to guide you. Let's say the indicator is just a tool, or use your own version or build your own version, whatever it is, just so you know the key moments in time of the day to be taking the most probable trades. So then all we would need in this is to see, do we have the checklist of the theory, which is break, test, inducement into supply? Do we have time window and lower time frame confirmation? If we do, it's worth an entry. And this one was a full session move. Basically, on the minute of the key time window, the move starts, the inducement, and then in the hour of the key window, the lower low is made. So from high to low of that session push is about 30 pips, which is the average session volatility we are optimizing for, with a 3 to 4 to 5 pip stop loss. Very easy to get your first TP at 1 to 3 risk reward and to bank in 1.5%. Same for this one. This was like a 25-30 pip move. Once again, enough to bank in the first TP at 1.5%. So this day could have been a 3% day very comfortably. Let's keep going back in time. Just the day before we see it once again. This is amazing to see. It's literally almost daily. We have a lower high going on to make a lower low. So when we see that bearish market structure movement from lower high to lower low, we have to identify where was the previous support level. Did that turn into a resistance level? Did we have a break, test, continuation? Support level, we have that respecting. We get the break, test, continuation. Once we have seen that resistance and the test continuation, then we just wait for an inducement to a nearby supply zone. Is this nearby supply zone relevant? Yes, it's the decisional that led to the break of structure. So relevant POI. And then when is it tapping in? In our key time window on London Open. Perfect once again. So when it meets these requirements of time plus the theory, confirming the inducement with a displacement, lower time frame confirmation, another perfect trade opportunity. And this one could have been a full 1 to 10 trade based on the movement. If you entered over here, you could have cut the whole day all the way down. I'm just showing you the power of the theory and how I've been using this exact trade type, this exact trade model in my public signals. That has netted a lot of percentage for you guys, the public, for free. And now you can go ahead and implement it within your own trading. Now, go back the previous day. We have a high in the market. The high in the market goes on to make a low in the market. Do we get a support level over here forming? Yes. Do we get the break, test, continuation? Yes. Do we find a new form resistance level? Yes. We have 2 touches of equal highs. And then does price come into a nearby supply level and do a inducement into that mitigation? Yes, it does. When does it happen? No coincidence. It happens on one of our key time windows, which is the London close. So on the London close, we get an inducement into supply, and then we get the movement down through the rest of the Asia session. Perfect once again. Then let's go back a little bit more, and looks like we have another version just the day before that. So it's pretty much daily, where we have a low in the market that goes on to make a higher high in the market. Perfect. Step number 1. Then we have a resistance level. Is that confirmed with a break test to find the support level, to then respect the support level right here? We have now found a resistance turn into support. Once we have had that, do we get an inducement? Yes, we do. Does that inducement tap into a nearby POI? In this case, a demand area? Yes, it does. So once again, it's confirmed on every level. We have a market structure shift, we have a resistance level, support level, then an inducement into a demand area. Does it happen on a relevant time moment? Yes, it does. When is it happening? It's happening on New York Open, which is built into my custom tool right here. So we can see time-based manipulation plus the theory, and then all you need is lower time frame confirmations to really confirm it. By the way, this price action was another signal that I was giving on Twitter. So go ahead and test that, because I gave a signal within this price action, and then I gave a signal within this price action. So this is exactly the way I've been trading publicly, documenting, and I'm finally revealing to you guys exactly how I do it. So you get the point. I could go back and do this for weeks and weeks, months and months, but I want you to go ahead and explore it yourself. But it just shows how powerful the theory really is. And we can see once you follow the step-by-step approach that I've been giving with the exact rules, and then you have the confirmations on top, which are going to be time window is going to be essential. Lower time frame confirmation models are going to be key. Then having a strict break-even protocol, take profit protocols to optimize for these movements, and understanding session movements, session volatility. So you're not doing this out of context. You want to be doing a slight top-down analysis. You need to know how to verify points of interest. You need to know how to refine points of interest. So there's a lot of building work to do on top of this theory to go from, this theory probably gives you a 60% win rate. If you want to take it to an 80% win rate, you just add refinements on top that will increase your probability. And in the end, it's a very accurate theory. It's going to give you high risk reward. It's going to give you fast movements because it's optimized for session volatility. It's optimized for inducements of the day. And when you have a volatile moment plus an inducement, you get fast trades like this. It doesn't chop around. It goes from your entry to TP very fast within the space of 10, 15, 20 minutes. And that's beautiful for your psychology because you're not sat in drawdown for 1 week like a lot of swing traders are. Now, this is advanced level trading. This is not the kind of concepts you will freely find online. Nobody talks about this. And the reason is because after almost a decade in the markets, and after studying almost every single course, going through every single curriculum, studying every single single type of way of trading. I have found my own unique refinements, my own edge in the market with a lot of market experience, a lot of market IQ, application-based refinements, data-driven profitability. That's the reason I've been able to make millions of dollars in my life. That's why I've been able to perform 50% profits in 7 months, publicly proven, because I've deeply understood the nature of the market, primary drivers, and true intrasession movements. Now, I don't believe in courses, and I don't think it's the most effective way to learn. So therefore, I'm not going to say, hey guys, join my Discord and la la la. No, I only work with a handful of people that are hand selected after a full application process and interview process. And I don't do a course. I do a 6-month mastermind and consulting where we work hand in hand, where you get access to me on a regular basis and I can go through your trades, your journal, your exact approach to the market and guide you directly. That's what true mentorship is. That's what true mastermind and consulting is. And I only want to work with people that will meet me in the middle, because I'm going to give my time, I'm going to give my years of refinements. So I need someone that's going to live up to the work ethic I require and that is going to follow my instructions. And after 6 months, my personal mission is to be sure you are funded and well along your way to becoming a truly full-time profitable trader. If that sounds like something interesting to you, go ahead and click the link in my bio, apply over there, and my team will get back to you. And again, it's not a joke, it's not a gimmick. My team literally rejects 99% of applicants. So do take some time and put as much detail as you can in the application form. And hey, maybe see you on a one-on-one coaching call very soon.